Hey guys, welcome back. I hope you had a really great day trading yesterday. So today is Wednesday, March 12th, and we are in pre-market and the CPI inflation report just came out. We are up in pre-market and I haven't had a chance to look at that inflation report. Let's take a look at yesterday's price action first and give the market a little bit of time to digest the CPI report. So this right here is SPY, and yesterday we opened down and we took it all the way down to the bottom of the implied move at 552. That level did catch us, so if you sold 552, 549 bull put spreads, those closed up. And they closed up 100% at expiration. And then from there we bounced. We took it all the way back up to, you guessed it, the 35 EMA. 35 EMA has been a really strong resistance level ever since we crossed down underneath the 30-minute 200 moving average. So 35 EMA yesterday hit us back down and we closed in the red, down 0.83%. So 35 EMA, still the level to watch. Right now in pre-market, we are right at that level. SPX yesterday also opened with a small move down in that first candle, and then we dropped. We took it all the way down to the bottom of the implied move, 55.30, and I did take 55.30, 54.95 bull put spreads yesterday. That level did catch us and we brought it all the way back up to the 35 EMA. Look at that 35 EMA. This level needs to be on your chart. It is a really strong resistance level, and it's been a consistent resistance for over 2 weeks now. So 35 EMA needs to be on your chart. SPY closed down yesterday 0.83%. SPX down 0.76%. VIX, I wish I could tell you, and I'm going to start writing it down since I have moved to recording in the morning, but I believe I saw that it did close up, and we did close within the implied move. So options did contain the move yesterday. QQQ did open yesterday slightly up, and we did come up to this first resistance. This was a previous support, and we are now seeing it as a resistance. So look at that right there. This is previous resistance here, then we gapped over it and saw it as support, and that level did act as a resistance yesterday. But more importantly, we dropped, and then when we came up to the 35 EMA, we saw that as resistance. So rather than focusing on this level, which I'm actually going to go ahead and take out, the more important thing is that we saw that 35 EMA as resistance, and that is the level to watch. Right now in pre-market, we are actually above that. So if we can get above this 35 EMA and start seeing it as a support, then maybe we'll take a swing at some of these levels right here. 200-day moving average still has some upward momentum here. I wouldn't be surprised if we revisit that. So 35 EMA and QQQ closed down yesterday 0.24%, and we did close within the implied move. IWM, same thing over here. 35 EMA brought it down, and this right here, we are finding a little bit of support on top of that next support level at 198. Let's zoom out here really fast and see where that 198 is. Right here, we did see support, and this is so far looking as support. I'm not going to call it support yet. One day bouncing on that level is not necessarily support, but we are seeing a little bit there. And in pre-market today, we are getting above that 35 EMA, which look in IWM, that 35 EMA, not even one blue candle above that line. So if we print a blue candle right here today, that is a big deal. And as of right now in pre-market, we are right here. We would have to get a little bit above that to print a blue candle. So keep an eye out for that. IWM yesterday closed flat, 0.01%, and we did trade completely and closed within the implied move. So that's a good sign. Closing within the implied move across the board is a sign that options are predicting the move. Lastly, we have DIA. Yesterday, DIA opened with a gap down underneath previous support. And then from there, we dropped down, came back up, and saw resistance at that level. Now, 200-day moving average is really where we gapped away from. And look at that 35 EMA dropped underneath the 200-day moving average as well. So that is bearish. In pre-market today, we are up 0.5%, which takes us to right here, which is still underneath this 35 EMA and this 200-day moving average. So we have some pretty important levels just above us. And the momentum here on the 200-day moving average is still pointing up. So spending a little bit more time at this level, testing it, seeing if we can regain momentum is likely. You typically don't want to go short at an upward facing moving average. And even though we did get underneath it yesterday, you could see that we got pulled right back up to match up with that momentum. So there you have it, guys, a little bit of a late video this morning. Today's trading ranges will be out on TradingView either right before or a little bit after market opens. And that's fine. You shouldn't be rushing to put a trade on a day like this anyway. So come out there in a little bit and get those trading ranges. I will be posting them. And let's make some money today. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow morning.